G'day everyone, welcome back to Pizza Investing. Today is June the 10th, 2023. This is the high grade copper price update. On the weekly, we're showing a neutral signal on our bias indicator, likewise on the daily. And on the hourly, we're showing a bearish signal on the CCI and the price chart. So looking at this on the weekly first off, we look at the triple moving average of the price chart, and that's currently not aligned with the moving average of the CCI 150. So it's showing us a neutral signal. It was in a bearish momentum in those last few weeks, but it's broken up into a neutral signal. On the daily, likewise, it's neutral. We've also got this minor resistance here at 38,372 that's forming, and that'll probably remove this higher resistance up here at 41,880 once this confirms in the coming days. And if you notice here, we've got a support down here at 35,540. So we may see a bit of a retracement to the downside. We've got this bearish pin bar happening at the moment on the daily in the last day of trade. So we may see a bit of a retrace to the downside in the coming hours or even days. On the hourly chart, more closely you can see here we've got a bearish divergence on the CCI versus a bullish divergence on the price chart. And they usually work 80% of the time. Back here we had a bullish divergence versus a bearish divergence on the price chart, and that actually worked. You can see there if I zoom in, if we drew a channel, let's draw that channel back there just to give you a bit more clarity between that low and to the highest candle in that range. The price broke above that channel, and our initial target would have been somewhere between the 38% and the 61% level. It's actually gone through and actually just probably touched the 61% up in the last few hours. So it hit our target range during that period, that bullish CCI divergence. And currently we're in this bearish divergence, which means we may see a decline or a pullback from where we are today. So the way you would read that is, let me get rid of this channel to make it a bit more clear. So you draw, again, a channel, assuming the price continues to the downside. You draw a channel between those highs and bring it back to the lowest candle in that channel. So if the price broke below this channel, that would be your entry point, and your target area would be from the previous low, somewhere down there, to that high in that range. So your initial target area would be somewhere from the 38% down to the 61% at least. Somewhere in that range. So if it breaks below that channel, assuming it keeps going sideways and breaks below here, well, that's where we're expected to enter in that little range there between the 38% and the 61%. Also, if I zoom out, you can see there a bullish backtest and also a bearish backtest. And there were a couple of average downs. You can see there when the price is declining on the bullish backtest, it averaged down once, and it's currently averaging down here as well more recently. Now, to avoid these average downs, that's why we look at the weekly and the daily. We want to make sure the weekly is in a bearish momentum. Likewise, when it was back here, that's where you would have had a bit more confidence in placing short trades. So again, you can see there during that period, those would have been nice little short trades to enter and avoid going long or short at the moment because we're not showing any alignment between the weekly and the daily. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to our Patreon page where we also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.